And when that happens, then Bitcoin's going to go the other way. And it's because that, in my view, will be the prelude to what will ultimately be coming, which of course is the name of the book, The Big Print. And so, as I said to Nico, I also think by the end of the year, Bitcoin's going to be at 140 to 250. So that's December. But I guess the point I'm trying to make is, and this is just a guess, I mean, I've been wrong a lot, probably be wrong about this too, but you have to, when you're a macro guy and you're making investments, you're managing a fund, you got to try to make your best estimate of what's going to happen. And I think the stock market's in trouble, and I think that right now there's a lot of correlation between the high-tech stocks and Bitcoin. I think this cycle will break that correlation, that this will be the time when, the stock market will roll over and they will come with liquidity to try and prevent the downturn from occurring, and the stocks will ignore it, and Bitcoin won't. Bitcoin will go much, much higher.
The world economy is collapsing. The Fed is in a tight spot, inflation is out of control, and debt ceilings are a nonsense. But Bitcoin and gold, they aren't lingering. They're getting ready for a breakthrough. The days when the market swayed in response to every word the Fed spoke are long gone. The script is complete. The focus is now shifting to hard assets as credit markets shake and liquidity becomes more scarce. The twist this time is that it's not merely a story about a store of value. Gold and Bitcoin will likely rise to levels that will surprise Wall Street, according to seasoned investor Lawrence Lepard says Bitcoin worth $250,000. It's not just possible, it's inevitable. Lepard has made audacious decisions in the past. However, he claims that this cycle is not like any other that we have observed. Investors are waking up, confidence is eroding, and fiat is failing. Central banks will pour liquidity into the system when the crash occurs. The worst part is that as gold and Bitcoin soar, stocks will stall. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Larry, what's going on with the price of Bitcoin?
Yeah.
And your answer was fascinating.
Yeah, so let me just elaborate on what I think is going on. And it's probably not what Bitcoiners want to hear right now. But so I think if you look at what's going on, where we are in the movie, right? We're at the point in time where the U.S. stock market is about to roll over. It started rolling over, broke through some critical resistance. And we're in a little bit of a bounce right now, but I think we're about to have another leg down. And this is all being driven by the Trump policies, the tariffs and kind of the disruption stuff he's doing. And the market doesn't like uncertainty. There's a lot of uncertainty. So, and the market is very overvalued using any historical measure. So I believe we're about to enter a market downturn, a fairly significant one. It's kind of down 10% from the top. I think we could easily go down 20 and maybe even 30 or 40 over the next few months. And if that's the case, that's a negative liquidity event. Stocks get marked down and people feel less wealthy, and it's a cyclical thing for the economy, et cetera. And so typically when that happens, all asset prices go down because people have to sell to meet margin calls, so on and so forth. And as I was saying to Nico pre-show, Bitcoin's not immune from this, sadly. It is sound money. It should be a safety bid, but it won't necessarily get a safety bid. And so I'm actually of the view that, just to cut to the chase, that we could see a lower Bitcoin price before we see a much higher Bitcoin price. And by that I mean maybe something in the high 70s, something starts with a 70, which I know is not what people want to hear. But I think it's possible. If it does happen, I don't think it'll last for long. And the reason I say that is that the Federal Reserve has already started to indicate they're going to loosen. They reduced the amount of quantitative tightening that they are doing from $25 billion a month to $5 billion a month. That's a big cut. And a concession, I think, on the part of Powell to help Trump out. And I think that when the market rolls over the way we're describing, it won't be long until the economy and employment and all the other indicators start to indicate softness too. And even though they haven't really licked inflation, they're going to look beyond that and just say, well, okay, time to get more aggressive about cutting, and they're going to cut. And when that happens, then Bitcoin's going to go the other way. This is really a big tell. Will be when this stock market rollover occurs, watch what happens to the U.S. 10-year. Do interest rates go up or do interest rates go down? And the reason that's important is that if interest rates go up, that implies that they really don't have enough money in the system and that they're going to have to go to QE and yield curve control more quickly. I mean, typically, history shows that when the stock market rolls over, the bond market ought to get a bid. People who are selling stocks, they go to the safe haven of bonds. If you're going to have a downturn, you're going to have a recession, you want to lock in a yield. That has not been happening recently. The first 5% down in the stock market, bond market caught a little bit of a bid, and yields came down a bit. Second 5% down, the bond market went the wrong way. And I think this time, I think people are beginning to figure this game out, which is that we are in a sovereign debt crisis. Noted by $3,000 plus, almost $350 gold, and Bitcoin was at 106, admittedly down from that, but still both record highs within the last few months. And to me, those are both signals that the government is slowly but surely proving they can't solve this problem. And I think the reason the market's done as well as it's done right until now is that there's kind of a false belief that the Lutnick camp and the Musk camp, and the lovers of Trump, and by the way, I don't hate Trump. I just don't agree with everything he does. The lovers of Trump are kind of they've got a lot of happy talk going on. They, we can land this plane. It's going to be okay. We can cut back this expense. We can get the bond market down. I mean, they're talking about doing a lot of things that if they could do them, it would be a miracle. And so I think what's going to happen is it's going to become clear that miracle is not likely to happen, and that they're going to need help from the Fed to do it. And we all know what help from the Fed means. Help from the Fed means printing money, and printing money means Bitcoin and gold continue to go up. So
Bitcoin may momentarily drop to $70,000 due to Trump's plans, the Fed's panic tactics, and an impending stock market meltdown. The twist is that the Fed will have to print more money after liquidity stops, and when that occurs, Bitcoin is poised for an explosive upward rise rather than merely bouncing. The indicators of a sovereign debt crisis are flashing red. Bitcoin is holding firm, and gold is already rising. This time, there won't be a smooth landing. Instead, there will be fractured markets and desperate money printing. Any decline won't last long. The comeback? It might be a historic event. Bitcoin won't simply soar as the banking system collapses. It will change the rules. The Fed's careless money production has driven the economy to its breaking point and increased inflation. The fall is being accelerated by Trump's policies. Retirement funds might be destroyed with a 40% stock market decline. According to Lawrence Lepard, this is the great monetary reckoning. The only question now is, will you stay chained to a failing system, or will you move toward real sound money? To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Look, the markets are just so distorted that, and look, I'm really glad Trump won. I mean, it's so much better than the alternative. But, I don't think God himself could solve this problem. I mean, they handed him a pile of shit. They really did. And, the deficits, Doge, Doge is trying to do the right things, but it's going to be too little too late. And so my view is just, there's no way to get around the fact that the free money bubble that, got created post 08, and then again worse, even more in COVID, when we grew money supply 40%, went to 0% interest rates. I mean, the chickens are coming home to roost, right, for that action. So
Absolutely. And
I just felt like this is insanity. They're arguing about all these things that do not matter. And there's one underlying thing that really does matter, which is inflation and control of the money supply. And you've got a Federal Reserve that at the extreme sets interest rates at 20%, Volcker, or 0%, Bernanke, or again 0% with Powell, and they're just out of control. I mean, it's like they're bouncing off these guardrails of inflation and deflation. And so, to me, that's what's causing all the problems. That and the inflation are why everybody's so upset and angry. And everybody's really hurting. I mean, the bottom half of this country is getting smashed. Even the top half of this country, is getting hurt. But they've got more resources with which to cushion it. But sadly, I think the markets are about to come after that as well, because for all these people who are sitting in the stock market feeling good about life, basically Besant and Trump have said, we don't care about the stock market. We care about American jobs. We care about the American worker, and most American workers don't own stocks, and we care about the bond market. And so that's a big, big shift in policy. We haven't seen anything like that in a long time. And I think that's the right way to go. But here's the point I would make. I think a lot of people believe that you can just gracefully deleverage this big bubble and get out of this without there being some disruption and some pain. And from my experience, having lived through as an investor 2 of these big bubbles, 08 and 2000, that's just not the way it works. When it turns and a bubble bursts, there's been a lot of misallocation. I mean, look, AI, it's going to make our lives a lot better. I get it. It's really important. But AI reminds me of the internet, the routers and Cisco back in 2000. There's been way too much capital put into AI. These valuations are nutty. And, history always shows that these kind of extreme valuations correct back to the mean. And so when that happens, imagine your average upper middle class family that has a lot of their retirement in stocks. Imagine, take those stocks down 40%. They're not going to be feeling so great. They're not going to necessarily go buy that new car, take that vacation, buy that rental property, whatever it is they might have done. And in fact, we learned this morning, I thought it was pretty interesting, Trump's definitely going through with these automobile tariffs. So, you're buying a car from Europe, guess what? Guess what? You're going to pay 25% tariff on top of it. So.
Wow.
Yeah, and he's serious about this stuff, and arguably rightfully so. I'm not criticizing the policy. I'm just saying, to think that we can do these policies and not have something break is, in my opinion, just not being realistic about the mathematics of what happens. When you push on one thing, another thing happens. And it's too late. I mean, sadly, I mean, the only, I mean, people ask me, is there an easy way out of this? I mean, there's no easy way out of it, but there is a fairer way out of it, which is more of a debt revaluation, a debt reset. I mean, the problem is we've got too much debt as against the underlying assets. And I would highly recommend that everybody listening who's really interested in the subject and understanding it more clearly, because he and I are completely aligned, take the time to listen to the pod that just came out between Luke Groman and Danny Knowles on what Bitcoin did. Brilliant hour and 15 minutes, lays out just what we're describing here in greater detail, obviously. I mean, it's you know, they are in a position where they really don't have that many good choices. And so, you know, and almost all the choices other than a collapse, which no one wants to have happen, are inflationary. Yeah. And so, you know, as the book advocates, there is a way out of this, which is a one-time large inflationary event and a reset to sound money. And that would make the world really good. The inflationary event itself would be very painful. There's no way to, you know, there's no way to get out of a sovereign debt bubble without collapsing the value of that debt. So people who own long-term bonds, they are going to suffer, by definition. It has to happen. But history shows that in monetary resets, when you do reset and you get back to a sound money standard, things get better.
Yes.
So, you know, my argument would be if we had really enlightened government, they would tell everybody this, they would explain it, they would try to make it fair, they would do it one time, it would suck, and then on the backside of it, we'd all recover and we'd operate in a sound money world. You know, sadly, that's not the way governments work, right? Yeah. You know, they're going to wait until there's a crisis, right? And then, you know, they're going to cobble together some solution. The first one probably won't work, and then they'll try something else, and that won't work either, and then eventually they'll get to the right solution, which is a sound money solution, right? So that's kind of, if I had to guess, that's how it's going to go, right?
Absolutely.
Lawrence Lepard breaks through the noise with a harsh reality. An inefficient financial system is the unavoidable cause of the turmoil we observe in politics and the economy, not just poor leadership. The true problem is inflation, unchecked money printing, and a Federal Reserve that veers between extremes 0% rates 1 minute and big hikes the next, while people argue over small issues. This type of careless policy harms actual people in addition to confusing the markets. Even the upper middle class is under danger, and the most vulnerable members of society are already having difficulties. Consumer spending will come to a standstill, and the appearance of prosperity will fade as the stock market bubble collapses and retirement funds disappear. Although technology and artificial intelligence may be the way of the future, Lepard makes it apparent that there is no simple solution to this problem. The math just doesn't work anymore, and the economy is based on too much debt. Resetting is the only practical way to move forward. It is a terrible inflationary event that reduces the value of debt and allows us to rebuild on sound money, but it is not a gentle one. According to Lepard, Bitcoin is a component of that remedy. It provides a freer and more equitable financial system that is independent of central banks and political maneuvering. Governments will not acknowledge this until the situation has reached its peak, before they face the harsh reality that the existing system is complete and that real money will rule the future. They will rush to find answers and fail a few times. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.